Today, life insurance. Okay? I've spoken to several people that thought they knew what type of policy they had or what was going on, and they didn't. And so, right now, we're just going to go over life insurance basics. We're going to start with the basics, and then we're going to build and grow. So, buckle down. This one's going to be a little bit of a longer video, but I want to make sure we hit all the high points so that as you are talking to your triangle defense financial planners, your financial advisor, your accountant, your estate's attorney, separate video on your three people for financial planning. Run over to that one. As you're talking to them about your financial situation, your short-term goals, your long-term goals, that you understand what they're talking about, and you can come with questions for them about, whether or not this type of life insurance works for me. Again, so we're all clear, not giving you legal advice or financial advice. Educating and resources and tools so you know how to come to the table with your financial planner, advisor, accountant, and estate's attorney to craft the best plan for you so that when it comes to deciding what insurance you're going to get, you know what your options are and what works best for you. Understanding also that this might change throughout your life. It's going to change from when you're single to when now you're married, empty nest, close to retirement, or maybe you've had a medical emergency, a disability. That's going to change how this is going to play out for you. So this is why I was like, it's super important that when you're making these decisions, you've talked to a financial planner and advisor, someone that understands all the nuances and the different types of life insurance, someone that understands what your budget is, what your goals are, short-term and long-term, okay? All right, first things first. What is life insurance? Generic, it's a contract between you and a life insurance company. You pay premiums, either annually or monthly, and then if you die, they pay your beneficiary the death benefit. Okay, so should you die, they were like, oh, those premiums you paid, your beneficiary gets the death benefit. When people are like, I don't need life insurance, I'm quoting another a financial planner that I spoke to that said, if you don't make it home tonight and someone relies on your income to live, you need life insurance. Be that your minor children, your spouse, if you're taking care of an aging adult family member, if someone is relying on you for their livelihood, you need life insurance. Not only that, you yourself may need life insurance because what if you become disabled? Okay? So like I said, when you're discussing life insurance, a lot depends on what are your financial goals, what are your short-term and your long-term goals. Now, I mentioned the word beneficiary. What's a beneficiary? The beneficiary is the person that you designate. So if you die, who gets the money? Who gets the death benefit? That's the beneficiary. The beneficiary could be your spouse. It could be you can choose a loved one. It can be your trust. You can make your trust fund the beneficiary of your life insurance policy. You can put your minor children. There are pros and cons of why you should not do that. And I have a separate article on Rondaisms.com about whether or not you should name a minor child as your beneficiary of a life insurance policy. And go there for more detailed information. I'll just briefly go into that here. Most of the times, unless the child is 18, they cannot have that money. So the court then appoints a guardian for your child that is supposed to hold the money and then give it to your child when your child comes of age. Problem with that is, will the guardian hold the money until your child comes of age? Or let's assume that, your child is of age. Here's my cautionary tale. I always have one. So a person relayed to me that a man had died, had a teenage child who happened to still be in high school, but they were of age. So this high school senior who's of age received a life insurance payout of over $500,000. And as you can imagine, by the time this person was 21, that money was gone. They were broke. So making your minor child the beneficiary of your life insurance policy is probably not a good move. Run over to rondaisms.com. Like I said, there's an article that goes into what would be better alternatives. And again, conversations you need to have with your estate's attorney. Okay? So that's what your beneficiary is. They are simply the person that receives the death benefit that you've selected. And mention, if you have minor children, that is probably not the right move to make. Talk to your estate's attorney and your financial advisor before naming them as the beneficiary of your plan. If you want your child to benefit from your life insurance policy, there are ways to do it. There are other options. So, like I said, the next thing, taxes. This is why you need to be talking to an accountant. Typically, if someone dies and you get a life insurance payout, typically the payout, the death benefit itself is not taxable. However, if you have permanent life insurance that has cash value, and that cash value, that might have some tax consequences for you, which is why you need to talk to an accountant. And you're like, hold on, Rhonda. Like I said, so we're going to get into the different types of life insurance. Give me a minute. I'm building up. Just hold on. We're building. So we've talked about, you have a beneficiary, permanent life insurance that has cash value may have some tax consequences. Talk to an accountant, talk to your financial advisor, make sure you understand that. The next thing is a traditional life insurance policy, whether or not it's term life or perm life, is going to require you to have a medical exam. Typically, they send someone to your home. It's short. It shouldn't take no more than 15-20 minutes. So here's the deal. Life insurance companies are just not going to give you $1 million life insurance policy because you ask for it. They do things based on your risk assessment. So they take, they take blood. There's probably a urine sample, all that other stuff. I have a separate article on Rondaisms that just goes over the medical exam for life insurance. Okay, so basically they put you into a risk assessment. Are you in super good health and super young? Are you in average health? Are you risky? And by risky, I mean, are you a felon? Do you have a history of certain types of illnesses running your family? Do you have, or have you had a terminal diagnosis? Are you a cancer survivor? Those things, are you a smoker? Those things are high risk. And if you're high risk, you're going to pay a higher premium. Or, depending on your health risk, they may decide, based on the medical exam, they won't provide you with insurance. Now, even if they say we won't give you a traditional insurance policy, there is hope for you. You've been denied an individual plan based on a medical exam. You do have alternatives. First alternative, group life insurance. Group life insurance is a term life insurance policy, and most employers offer this to their full-time employees for free. So they will offer you group life insurance. Typically, it's up to your salary amount. So if your salary is $50,000, they'll give you the group life plan free for $50,000. If your salary is $100,000, that way. Some employers' group life coverage will say you can double your coverage. If you choose to double your coverage beyond your salary, most of the time they're going to want a medical exam. So if you've been denied life insurance because of the medical exam, you're just going to have to stick to the basic group life policy, most likely with your employer. Here is the disadvantage to group life insurance. Once you leave that employer, fired, resigned, discharged, laid off, that group life insurance ends. So once you're no longer with that company, you lose that insurance. So that's just something to keep in mind. Second option, if you are denied life insurance based on your medical exam, there's thing called no medical exam life insurance. You've heard of these before on the television, or you received a mailer from Colonial Penn or Mutual of Omaha where they're like, here's, we will insure anybody, no medical exam. So, no medical exam life insurance policies are term life policies typically, and they have a low death benefit, and they have restrictions. So, here's what you need to understand about term life insurance policies. So these no medical exam policies, there's one that's called guaranteed issue, and it's no medical exam, but you at least have to be 50 years old or older to qualify. And typically the death benefit is limited to up to $25,000. So that's guaranteed issue, no medical. You have to be over 50 and over, and the death benefit typically is no more than $25,000. The other no medical life insurance policy is called a simplified issue. Simplified issue, there's no medical exam, there's no age limit. Coverage can be up to $100,000, but you'll have to complete a health questionnaire. If you fail to disclose something on that health questionnaire and they insure you, they can deny your payout to your beneficiary if you fail to properly disclose those things. So even though simplified issue has higher coverage, there is also still a health questionnaire. So keep that in mind. And here's the big kicker for no medical exam life insurance policies. For them, there is typically a 2-year waiting period. What does this mean? If you die within the first 2 years, they don't pay out to your beneficiary. Cautionary tale. Someone reached out to me. They had a family member that was ill, on life support. Doctors told them, you need to consider removing them from life support. I was like, so did you look at the life insurance policy? Have you guys looked at the life insurance policy? Have you looked at the will? The response, Rhonda, how could you say that at a time like this? I'm like, I think you should check out the life insurance policy in the will before you move. Now, I knew this person was high risk and their health was suspect. So I'm assuming that the only person that, if they had life insurance, the only way they got it was through one of these no medical plans. But I also knew these no medical plans had that 2-year waiting period. Anywho, don't listen to me because that's rude, and I'm being crass. And unfortunately, they pulled the plug. They're getting ready to make funeral arrangements. And they called the funeral company, and the funeral company's like, you know what? The 2 years, the person was 2 days out from the 2 years. So they didn't cover. I'm like, and had they just looked at the policy, left the person on life support for 2 more days, they would have got a payout. So if you're going to do the no medical, just understand that 2-year waiting policy. Also, 2-year policy reminds me of something else. If someone has, whether or not they have no medical insurance or not, so depending on, like, if you have regular traditional life insurance and the person has died, there's death by suicide, many life insurance carriers will have what they call a 2-year contestancy period, where they will probably withhold paying out, basically to see if during the whole exam and health questionnaire part, if the person had factors that was not disclosed, then they can refuse to pay out. So you want to be mindful of those things. All right, so we've discussed what life insurance is. We talked about beneficiaries. We talked about taxes. Went over the medical exam process. And just so you know that the higher your risk, the higher your premium. If you are considered too high risk for traditional life insurance, like if you're a cancer survivor, typically you got to wait about 5 years in remission before a life insurance carrier will pick you up. It varies. You're going to have a hard time finding someone to insure you after that, and you're going to have higher premiums. It is what it is. Smokers, same thing. Felons, similar. And this is where I was like, it's helpful to talk to a financial advisor they would probably know better which carriers handle high risk people. Okay. Now, let's get into the nitty gritty of it. Types of life insurance. There are two types of life insurance. There's two types: term life, permanent life. Okay? Term life insurance has a death benefit, and it's only for a 10, 20, a 30-year term. Once it's over, you're done. It's done. If you don't die between that time period, oh well. Permanent life insurance lasts your lifetime. It has a death benefit, but it also has this thing called cash value. Here's my analogy for term life versus permanent life insurance. Term life insurance is like renting. You got a lease. That place is yours for the term of the lease. Once the lease is up, you can renew or you can go find some other place to go. That's term life. Permanent life insurance is like owning a home, because you always have the death benefit that goes to your beneficiary, but there's also this equity in your permanent life insurance policy known as cash value that you can use during your lifetime. That's the big benefit to permanent life insurance policies. Now, term life, perm life, limited term, lifetime, cash value. Underneath both of them, there's several types of term life insurance and there's several types of perm life insurance. You need to know what you have and why you picked the one you have. Let's go over the easy one first. Term life. Most people know about term life insurance. You've heard it. That's what everybody talks about. Most people are talking about, level premium, where you have term life insurance for 10, 20, 30 years. You pay the same amount each month. If you die at the end of those terms, your beneficiary gets a payout. Another type of term life insurance is called an annual renewable policy. Who needs that? A lot's going to depend. Like sometimes, if you are a small business owner and you've gone to the bank to get a loan, the bank may require that you get an annual renewable term life policy for the length of the loan, because if you're a sole practitioner and you die and the bank's like, wait, our money. So that's sometimes the bank will require you have that as a collateral to make sure they don't lose out. I've spoken to some divorce attorneys, and divorce attorneys will mention, like, if people have gone through divorce and there's a child support settlement, or there's an alimony settlement that lasts, say for instance, child's 10 years old, you need to pay alimony up until the child is 18, for example. Some states, some judges require that you get life insurance to insure those 8 years, so that if you die during that time, the child support is uninterrupted. Again, this is why you need to talk to an attorney to figure out, these things, and you want to have your financial advisor to figure out what works best for you. We have a type of convertible term life insurance. It's a term life policy that at the end of the term, it can convert to permanent life insurance where you have cash value. Now, convertible term life insurance, you really want to talk to your financial advisor to see how this works and if this is something you should do. Should you do a convertible term life policy, or should you just go ahead and get perm life? Don't worry, we're going to get to the nuances of perm life in a second. Let's roll through this. We've talked about group life insurance, which is typically offered. It's an employer provided life insurance. It's usually free up to the value of your salary. But once you leave the company, you lose that and you'll have to find coverage elsewhere. We talked about no medical. Guaranteed no medical, which is for 50 and over. It's typically limited to $25,000. Simplified no medical life insurance, no age limit, coverage up to $100,000. But as you know, with these, there's that 2-year waiting period. If you die within that 2-year period, your beneficiary doesn't get the payout. You've heard of funeral or burial insurance. It is a type of no medical life insurance. Okay? All right. That those are the most popular term life insurance policies. There are more, but I just wanted to give you the basics so you know and understand principles. And when you're talking to a life insurance specialist or your financial advisor, you are understanding what they are talking about. Okay? Now, let's go to the heavy hitter, permanent life insurance. And it gets my goat when people are like, I have perm, they say I have whole life insurance. I was like, are you sure? Because they think permanent life insurance is just whole life. Whole life is one of several permanent life insurance products. So, if you have permanent life insurance, you need to find out which type of perm life insurance product you actually have. Here's the thing. Remember we talked about permanent life insurance is like owning a home. You get equity in the form of cash value. All right. Cash value, permanent life insurance, you still have your death benefit. But that cash value is equity that you can use during your lifetime. People use it to buy a home. They use it to pay for their kids to go to college. They use it to fund a wedding. I used to do volunteer work for nonprofit boards, stewardship fundraising, and I was shocked to, I was learning that a lot of the times those $1 million donors were not giving over $1 million in cash. They were taking out permanent life insurance policies for $1 million, making PBS, NPR, XYZ University the beneficiary of the death benefit, but they themselves use the cash value, the equity from that permanent life insurance policy during their lifetime. So on their death, yes, their favorite charity or university got that money, but during their lifetime, they were using those funds for whatever they wanted. Now, when we talk about permanent life insurance, here's how they're different from each other. Like, there's different types. What are the different types of permanent life insurance? Permanent life insurance policy has a death benefit. It has a cash value that grows tax deferred, which is another reason why you need an accountant, because it's tax deferred, which means there's going to be some tax consequences. Now, the biggest difference is between the types of perm life insurance policies you have. And here's how this breaks down. The difference is, where is the cash value invested? Okay? Where and how the cash value is invested. That's what makes whole life insurance different from universal life insurance, different from variable life insurance. That is how the differences break down. Let's run them down. Most people have heard of whole life insurance. It's one of the products for permanent life insurance. Whole life insurance is considered more a conservative thing, a conservative investment, because you're guaranteed the same premium for the life of the policy, but your money is invested, the cash value is invested in the insurance company's portfolio. Okay? Universal life. Universal life came about in the 80s when interest rates were high, and people we want to get more of a return on our investment. The kicker with universal life is, as insurance rates go up and down, so will your cash value. So in the 80s, interest rates were high. It was like 8% to get a student loan. High interest rates, high returns. But as we all know, during the pandemic in 2020, interest rates were low. Hello to the people who had 3% interest on their home mortgages and refinance. So if the interest rates go up, your cash value, make it rain. Interest rates went down, it's a drought. So with universal life, you have the flexibility to change your premium, whereas with whole life, your premium is the same throughout your lifetime. So with universal life, you can change your premium amount each month, and your cash value depends on what are the interest rates, what's happening with the interest rates, and it's invested in the insurance company's portfolio. Next up, guaranteed universal life. So guaranteed universal life is kind of like a combination of whole life and universal life. It resembles a whole life policy in that the rates are the same throughout the life of the policy, kind of like a whole life. However, it is similar to a universal policy in that you have interest rates tied to it. It's also invested in your insurance company's portfolio. Next up, one that has become super popular in the past 10 years, index universal life. Now, universal life typically is based on interest rates. For index universal life, instead of based on interest rates, it's based on the fixed market index. Okay, so we're talking about your S&P portfolios. So this isn't based on interest rates. How your cash value accumulates is based on the fixed index stocks and options. So if you are afraid to be playing on the NASDAQ and S&P, this is probably this is a riskier investment for your cash value. Conversations you need to have with your financial advisor and your insurance specialist, whoever you're dealing with, explaining to you the pros and the cons, like this is more for a riskier investment, this is a more conservative investment, so that you know what you're doing. All right, variable life. Variable life takes your cash value and invests it in the stock market. Okay, so that's variable life. Variable universal life gives you the flexibility to change your death benefit and whether or not it invests your cash value in the stock market. All right, that's the basics. Okay, to go deeper, you need to, say it with me, contact your financial advisor, your insurance person, to understand the differences and what is best suited for your budget and your financial situation, and how are you as an investor? Are you a more conservative investor, or are you willing to be like rolling that dice? When I say rolling the dice, other thing, when it comes to perm life insurance, these are considered long-term investment vehicles, not something you do today and then a year from now you start yanking the money out. So, and that's the conversation you need to have with your financial advisor. Okay? And like I said, if you're like, I don't have a financial advisor, I have a separate video on the 3 people you need to talk to for financial planning: your financial advisor, your accountant, and your estate's attorney. And in there, I give you information about how you can get some free resources. Check out that video. All right. So that is the nuts and bolts of the basics of what is happening when it comes to life insurance. You have term life insurance, which is like renting. It's only for a certain term. When it's over, if you didn't die, then there's no payout. Okay? Permanent life insurance is like owning a home. You got equity and cash value. The cash value you can use throughout your lifetime. When you die, your beneficiary gets your death benefit. Like I said, these are short cut versions. When it comes to life insurance, again, your needs change as you age. Do you have children? Did you get married? Did you get divorced? Are you prepared for retirement? Are you caring for aging parents? This is why we need our holistic plan. We got our triangle defense with our financial advisor, our accountant, our estate's attorney, that is helping us make sure that we have enough coverage that is hitting our short-term goals and our long-term goals to find the best life insurance policy that suits you. That suits you and your situation. All right? So, thank you guys for tuning in. Like I said, there are more resources on Rondaisms.com. You can either click on the financial planning link or just click on the life insurance link. I have a separate article that just talks about term life insurance. I have another article that just talks about perm life insurance. There's another one that goes term versus perm. You want it? I got it. Rondaisms.com. Thank you.